Hi, this is Brian Resney, president of Resney Wealth Management, and it's question and answer day. And, I always try to bring in different questions from my TV and radio show listeners. I want to talk about Wall Street firms and banks right now. We get these questions, by the way, all the time, and a lot of these questions, not only calls to the office, people I talk to on the street, my TV and radio show, but it's really about Wall Street firms and banks and what is their real role in managing your money. I will tell you, my firm's been managing money for almost 30 years. At the end of the day, the vast majority of Wall Street firms and banks, these big names firms and the banks, generally speaking, do what's called asset allocation. They're really in the business to collect a fee off your money. They're really not actively managing your money. All they're doing is spreading your money in this big asset allocation pie. You know, that pie chart you see on your brokerage statement, spreading it out. And basically it's set it and forget it, meaning there's no meaningful change, in my opinion, that's going to help their clients. I've seen this over and over again. Most of the new clients that we get at my firm come from these big Wall Street firms and banks. People who are telling me all the time, Brian, we virtually made no money in the last 5 years, even though the market's up. And again, I talk to my broker, I look at my statement, and it's like this big spread out asset allocation pie like you warn about all the time on your TV and radio shows. I think too many investors, unfortunately, don't like change, and they settle all the time. You have one retirement and one portfolio, and I stress this to every investor. Asset allocation is simply, in my opinion, a way for the brokerage firms and banks to collect a fee to do basically little or nothing for your portfolio or your retirement. And at the end of the day, if you want to make a return on your money, you have to invest it properly and make adaptive changes when necessary. It doesn't mean making changes every day, but just spreading your money out all over in all the different flavors, all it does is muddle your results. You have lousy performance, lousy returns, and ultimately you still have risk in the portfolio. So too many investors, unfortunately, fall prey to Wall Street and banks, and most people don't like change, so they settle year after year after year. If you want to have a meaningful chance of making money with your portfolio, you've got to be adaptive, you can't be one-sided, and you certainly have to avoid Wall Street conflicts and high cost that work against your money. If you're looking for real money management because you're a smart investor knowing you need positive change, call my firm for a consultation. We'd love to talk with you. Our minimum portfolio size is $500,000 on up. Please call us for a consultation and have a profitable day.